Hey everyone, how are you? If you're with us for the first time, my name's Adam Jason. I'm the founder of BRRRRinvest.com, and my mission is to help you invest through the BRRRR strategy easier than ever before through all the tools and resources I provide as a real estate attorney and also as a BRRRR investor myself. Today's video, I want to talk to you, and I think we'll get some feedback and it might spark some good conversation, but should your goal as a real estate investor be and as a BRRRR investor be to focus on appreciation or cash flow? A lot of people have different opinions on this, and I think it always comes down to a question of goals. What are you trying to achieve for your portfolio, for your life, for the lifestyle that you want to live, and how can you get there through real estate investing and the BRRRR strategy? I think for my own personal, and just to give some context to the video and maybe spark some thoughts in your own mind, my own approach is to focus on appreciation rather than maximizing my cash flow on a monthly basis. Why do I do that? I think primarily it's because I have other sources of income and run a real estate investment firm with other business partners of mine. So have some other opportunities to be generating income, doing things that I like doing, as well as running BRRRRinvest.com for you guys. If you have a situation where you're saying, I'm really trying to move on from my job, find something else, really replace my income, you might have to be thinking about cash flow over appreciation and a little bit more of the long term. Here's the issue I see with focusing completely on cash flow. And I don't think they're kind of mutually exclusive. Obviously, you don't want to find yourself in properties that you're paying out of pocket every month because you're hoping they appreciate over the long term. We're really talking about, do you push it to the max and try and get as much cash flow as possible? Or is it better to kind of try and strike that balance and say, okay, I'm going to sacrifice some cash flow now because I know the properties I'm getting are going to have great tenants and they're likely to appreciate over time, and I'm looking forward to that wealth creation that comes in the future. For those focused on cash flow, what you usually see is cash flow generated. It can be at its maximum when you're in properties that are a little bit lower in quality. You end up with, I think, properties that would be considered, low B-class properties, C-class properties, which can be great. You can find great tenants and they can pay every month and they might be super appreciative to have your property. But I think it always, as you're thinking about what's the right approach for you or changing approaches, is to think about also not only the cash flow that's going to be coming in, but what does that cash flow mean in terms of demands on your time, efforts, frustrations, dealing with tenants? Are you going to be able to find property managers who want to manage those properties? What does that all really mean? And not just getting caught up in, oh, this property is going to give me X number of dollars a month, which is so much higher than this other property, and that's amazing, and that's what I want. If that's what you want and that's for you, and you've thought through the risks and benefits and all that come with that, then amazing, and you've got a good strategy and stick to your criteria as you're making investments. My goal today is really just to point out the potential risks that you run if you're trying to push cash flow to the absolute maximum. I think that the cash flow approach and really pushing that does come with its fragility. You can see a lot of times, especially in a market like we're living in right now, where if you get a couple of people who aren't paying your rent, you really can find yourself in a tough spot. So if you're doing the cash flow approach and you're looking to kind of replace your income, I think you do need to give yourself a buffer in terms of the number of properties you have and the amount of money that you're expecting on a monthly basis. If you're looking for, let's say, $4,000 a month in passive income through real estate and buying properties through the BRRRR strategy, I think you really kind of need to be targeting a higher number before you say, okay, my goal is hit. Because if you get a few tenants every month that are unable to pay or are late and you're catching up with mortgages, you could find yourself in a tough spot if you're not giving yourself a little bit of a grace area and room for just natural things that occur as real estate investors, if you have a foreclosure, things like that. I've also found in my own experience and working with clients that, if you're really going for cash flow and that's your main focus, and you're going into these areas where it's potentially a little bit more risky in terms of the tenant pool, consistency of income, these kind of things where, you know, the benefits are great if everything's going wonderfully, but if tenants are struggling or they're losing their jobs, or, you know, all these factors that come into life sometimes, you really put yourself at a risk, and you have to ask yourself, is the upside from that and the benefits that you're going to get worth that to you to be in that kind of risk position on a monthly basis, and wondering if everything is going to go smoothly in terms of collecting your rent, those kind of things. I do think that the real benefit of real estate is the appreciation over the long term. And I think when you're pushing for the cash flow properties, you also have to be understanding to yourself that you're sacrificing some of the long-term upside. Properties in C-class neighborhoods, low-class B neighborhoods simply are just not going to, in 99% of circumstances, appreciate to the same extent that a property in an A-class neighborhood, upper B-class neighborhood would, because it's just not as desirable for people to be there, and they're not willing to pay more and drive up the prices in that neighborhood. So really just comes down to a question of goals. What's your risk tolerance? How much are you willing to accept in terms of sacrifice of your own time and effort? What are you, how do you want your real estate investing future to look to you? Like I said, to me, because I have other income sources coming in, not trying to kind of escape the rat race and find a replacement for all of my time and efforts, I'm more interested in the long-term value of real estate. The consideration, I think, is always of how fast do you need that cash flow right now to supplement or replace income you have from other sources. Everybody's going to be in a different place, but it's important that we understand the considerations and where we want to go. I wrote at BRRRRinvest.com, I think, a great article on the topic that dives deeper into this subject of, do I want to push for appreciation or do I want to push for cash flow? And we focus again on this goals question and where we want to go. Also at BRRRRinvest.com, we have all the tools and resources you could need if you are focused on the BRRRR strategy, looking to find that financial freedom and wealth that comes through the strategy, from deal analysis tools, offer letter generator, ability to interview your contractors, real estate agents, lenders, and the big one is the contracting tool piece that I built based on my experience as an attorney and real estate investor that you can use to hire your contractors, your property managers, and lease to your tenants. There you can get a free trial. Check it out. I hope you reach out to me, and I'd love to get some feedback and comments from you, which I'm sure we will, based on where you are. Are you looking for appreciation? Are you focused on cash flow? So there's probably some things that you think about in your mind that others would consider relevant when they're making this determination that I haven't mentioned in the video. So I'd love to spark a good conversation about that. I'll leave my email in the video so you can find me if you have any questions or want to reach out. And I thank you for being here with this video. Thanks for checking out BRRRRinvest.com. All the tools we offer there, really built that to make real estate investing as easy and secure and cost effective for all of you guys as possible. So thanks for being here, and I'll see you in the next video.